Another huge down day in the market. We touched this 4,300 again, and then boom, we're going to be testing 4,200 very, very quickly, if not this afternoon. That's a 100-point drop in less than 24 hours. The 10-year Treasury and did it say the 20-year Treasury are at their highest levels since 2007, meaning people are selling out of their stocks and going to get guaranteed returns in the 10-year and 20-year Treasury. Now, people say, why don't I go get 10 returns, guaranteed returns in the 10 and 12-year Treasuries? Well, one is you have to lock them up for 10 or 20 years. You don't have to, but what ends up happening is mutual fund managers have got their butts kicked a little bit, and so they'll run out, get these treasuries, bank some of the profits, and then they'll sell right out of them real quick as soon as they want to jump back into stocks. So they're on a year-to-year basis in terms of their performance, and that's why right now in the final quarter they have to make up some of their losses. So they'll sell out of some of their bad positions, um, take some gains, and then they'll jump into treasuries, and that's what happened. That's what's happening now for the mutual funds managers, but it's also wreaking havoc on the banking industry. It's hard for banks to make a profit when treasuries keep going up and up. That means they have to pay more on their savings accounts, which we've all seen the advertisements 4%, 5%. I think I saw 5.5% on a savings account. We're going back to pre-Reagan era inflation rates where you had to pay 14% on a house. We may be pushing those levels. So it's also been wreaking havoc on REITs because REITs have to borrow in order to get new properties. And so, yeah, we're hitting lows that we haven't seen in some time on some of these REITs. Let's see if I could go back further. Yeah, so we saw a 7 year. We have got this seven right here, and we may test that seven. For that REIT, that's a little aggressive REIT. Let's see, this one's a little less aggressive, and yeah, it's gonna hit all-time lows here pretty soon. So yeah, it's wreaking havoc on banks. It's wreaking havoc on REITs. It's also wreaking havoc on utilities, because a lot of utilities have fixed prices. They're not allowed to charge over certain prices sometimes. And if you look here, boom, it hit 55. I was buying this at 65. I was buying this at 64 because it held pretty good there. And then boom, it hit 55 like overnight. So yeah, this is an absolute unmitigated disaster. Thank you, Fed. So when you have an unmitigated disaster, what do you turn to? Well, people say Tesla, and that would be a decent answer, but Tesla is based on retail sales, meaning that the retail investor uh, is the one buying those shares up, and also they are based on retail sales, meaning Tesla has to keep on selling and selling more and selling more and finding new customers, which it hasn't been difficult for them to do so, but as other people start entering the market, then it's going to be more difficult and more difficult. They're going to have to leverage some of their other technologies like their fast charging stations and stuff like that. So you have to go with what the big boys go with, and the big boys go with Apple. So Apple is kind of like Tesla in terms of their cult following, but unlike Tesla, they continue to grow and grab market share, and people are not entering the cell phone market because it's on lock. So let's take a look. I mean, even Warren Buffett, what's like 25% of his portfolio is Apple. So this is going to be where you want to go when disaster strikes. Let's look at some of the levels here. We got one, it's currently trading at 170, down from 200. Down from 200 in 3 months. That's Apple. So if you want to look at a disaster, Apple is a disaster. And this is in terms of Apple. This wouldn't be a disaster for a lot of stocks. This is a disaster for Apple. But it's still where people are going to fly to when it comes to safety in the stock market. So let's look at these levels. So we got 125 here. Looks like a level. We got maybe 150-ish right there. So 120 to 150 is what you want to look at. Let me zoom in a little bit. There's the 150. It's a little more clear. And there's the 120, 125. It's a pretty clear there too. Let's keep zooming in and see where we go from here. 150 still holding. 120 is out of the picture. So I only had to zoom in twice. This is all the way back from the beginning of the year. I only had to zoom in twice to get that 120 out. So if if Apple goes to 120, boys, the world will be on fire. 150 possible. So let's see what's out there for some credit spreads. Put credit spreads, because put credit spreads are bullish, which means that I want them to expire worthless. I don't want to buy, well, maybe I want to buy Apple stock at 150, but I want to buy, I either get to buy Apple stock at 150 when it touches 150, which is okay, or they expire worthless, which is even better. So let's look at the 150 put. 150 put is 182. I'll collect 182 on this 150 put. Now I could just sell this outright and say, give me my $183. But it's trading at 150. Means that if this triggers, it'll take 150. It'll take 15,000 out of my account, which I don't want them to do. It in cash accounts. It'll also hold 15,000 on this cash secured put. That's why it's called cash secured, because they hold the amount. They don't do that in my account. But I still want to show you the correct way to do things. So let's expand this out a little more. Let's look at how far we can go. So the 145 is 130. That's a bit too rich because I'm going to buy some protection here. So here's some protection at 120. That's only $33. I could go to 115 for $26, or I can go to 125 for $44. So let's take a look. Bam. I can do that every time. So I want to buy the 120 put for protection, and I want to sell the 150 put as my go-getter. This is where I get my premium, and that's going to be $150. I'm going to be on the hook for a little less than 3,000. That's the max exposure here. And in order to get all of that, I would have to almost touch this 120 in order for this to not be a winning trade. And this is for December, so the end of the year. It's only taking up $634 of mine. So I could make $148 on $600, which is excellent. And that's why in times like this, you want to have your spreads ready, and you want to be able to trade those big stocks that can just be the first to rally. And Apple, when you come out of this, will probably be the first to rally. So let's hit that send, collect my 150 on my spread, and that's the trade.